Why does price keep reversing at the same areas again and again, as if buyers and sellers are waiting there? That's supply and demand. The idea that price moves between areas where large orders sit. In this first episode, we'll define exactly what a supply zone and a demand zone are, why price keeps returning to them, and how this simple framework underpins almost every zone-based strategy you'll ever see. This is the foundation, so let's build it properly. Start with the core idea. Price moves because of an imbalance between buyers and sellers. When buyers far outnumber sellers in one area, price shoots up and leaves that area behind. That's demand. When sellers overwhelm buyers, price drops away sharply. That's supply. The key insight is that these moves begin from specific areas on the chart, and price tends to swing between them, rejecting from supply up high and bouncing from demand down low. Learn to spot those two areas, and the chart stops looking random. Let's zoom into a demand zone. Price drifts down, pauses in a small consolidation, we call that the base, and then rallies away sharply. That base is the demand zone, the area where buyers absorbed the selling and took control. Here's why it matters. Not every buy order got filled in that tight area before price ran away, so unfilled orders are still resting there. When price comes back down to the zone later, those buyers are waiting, and price often reacts up again. The near edge is called the proximal line, the far edge the distal line, and the distal is where your stop would eventually sit. A supply zone is the mirror image. Price pushes up, pauses in a base, and then drops away hard. That base is the supply zone, where sellers overwhelmed buyers and reversed price. Again, not every sell order filled before price collapsed, so resting sell orders remain in that area. When price rallies back up into the zone, those sellers step in and price often turns back down. Same anatomy, opposite direction. The far edge is the distal line, the near edge the proximal line. Prop challenge, or leveling up your own trading. Signal Deck tracks every trade in R with quant-level analytics. Prove your edge. Free. Link in the description. Now watch the full life cycle on one chart. First, the zone forms. A base where a strong move began. That's the origin. Second, price leaves the area fast, creating what traders call an imbalance. Third, sometime later, price is drawn back to that origin, because the orders left behind there still need filling. And fourth, when it arrives, the zone does its job and price reacts away again. Origin, leave, return, react. That four-step rhythm is the heartbeat of supply and demand trading, and every episode in this series builds on it. Quick recap. Supply and demand zones are areas where a sharp move began, leaving unfilled orders behind. Demand below price where buyers step in, supply above price where sellers step in. Price returns to those areas to finish what it started, then reacts. That's the whole foundation. Next episode, we tackle the question everyone asks. How is this different from plain support and resistance? The answer, a zone beats a line, is where this method starts to pay off. Subscribe, and I'll see you in episode 2.